The other space which is looking pretty smart today is metals. Sales up to 92, Tisco up to 183, and Sterlite is up to 333. So good gains across metals. However, Macquarie is not particularly bullish on the metals universe globally and locally. Rakesh Arora of Macquarie Research joins in to talk about that. Rakesh, morning. What makes you circumspect or pessimistic about underlying base metals and global commodity prices?
See, the major reason for our a bit of continued, cautiousness is the end user demand is not really showing up across the globe. In spite of huge production cuts done by the metal companies, the stocks have remained pretty high, and it will take a long while really for these stocks to come to more normal levels, which can lead to a medium-term rally in the metal prices. However, in the short term, there has been some bullish moves, primarily driven by two things. One is that the dollar has depreciated, and secondly, China has been buying copper and aluminium and even zinc for the strategic reserve purposes. So these two things combined together has led to a short-term rally on base metals, and which is reflected in the stock price of Sterlite. Overall, I think for bulk commodities, be it iron ore, steel, the global trend has been towards downwards, and we don't see any major recovery coming there sooner.
Rakesh, morning. Especially with reference to steel, what do you see happening over the next few quarters in terms of prices and realizations? I mean, do you see both sliding further from here or plateauing out for a while?
Globally, steel prices have been going down only, and we haven't seen any kind of respite out there. And with expectation of raw material contracts to be settled at a lower price, I think the pressure would be continuing. Some of the companies have been quoting that inventories in the system remain high, and they expect liquidation only by June, July. So basically, in second half of 2009, we can see some kind of a bounce back for steel. Indian steel prices did bottom out in December and has been holding up pretty well. Also, supported by rupee depreciating. But I think there could be some pressure in the next quarter when lower raw material prices kick into. In fact, recently heard that the Russians are now trying to push steel in India at $390 CNF, which is anticipating earlier on. So some pressure on pricing is definitely should be there in the next quarter.
How much do you expect domestic steel realizations to come off by, Rakesh, over the next 3 or 4 months? And is that the primary reason why you have downgraded SAIL to underperformer?
See, the current HRC price in India is around 25,000 rupees. And we expect it to go down to anywhere between 23,000 to 23,500. So not much decline, but definitely some more decline. And so that will eat away into the benefit of lower coking coal prices to some extent, and margins would continue to remain under pressure. And that was the key reason why we have cut our earnings estimates.
You remain quite optimistic on cement as a sector, though. Could you take us through why, and what would be your preferred pick in the large cap and mid cap cement space in India?
Cement has seen continued good performance in terms of demand coming out from UP and Eastern India, and this has led to unexpected price increases. In fact, our report says that there have been further price increases in Eastern India and Northern India over the weekend. So clearly, price increase has been one of the major drivers of the sector here. There have been concerns on the oversupply, which definitely remains. But in this environment where all the commodities are facing a demand crunch, I think cement is much better well placed, and it is a bit of a lesser devil, as you might say. However, going forward, our numbers are much higher than the estimate of the street, and at least 20% upgrade is possible for FY10 numbers based on the current cement prices. So I think that can lead to further increase in the stocks, even though some of the stocks have rallied 30-40%. Our preferred pick remain large diversified names, and Grasim is our top pick out there. because not only this company has completed expansions well ahead of others, and should be able to gain in terms of volume growth in this demand pool.
Do you have a call on any of the natural resource stocks, Rakesh? Anything that you like from that basket?
See, resources is one thing which one should be avoiding in this market. It is better to be with converters. However, one company which really stands out is Hindustan Zinc because of its very low cost structure and high cash on balance sheet. But given that it is a liquid stock, we are pushing Sterlite Industries as our main pick, which it drives 65% of its earnings from Hindustan Zinc. So in resources, only Hindustan Zinc is one which really stands up.
Thanks, Rakesh, for joining in. That's a whole clutch of do's and don'ts from the commodity space and commodity stocks from Macquarie. Let's take a break.